Hi traders, Dale Pinkert here. You can find me on Twitter at Forex Stop Hunter. I'm also the host, analyst at Forex Analytics Community Experience. Acronym is FACE. It's a free webinar. You could join us from 8 a.m. to 9:30 a.m. Eastern Time. Just go to our website or go to Twitter and stop in and say hello. So the Fed has spoken, and there was no move today. Very interesting how Paul was also asked about being demoted, and he said he believes the law is he was appointed for 4 years and intends on fulfilling his term. So, despite this, we did have another pullback in the T notes. Now, you guys know that I'm looking for a potential top in bonds. I'll show the TLT chart Monday because I believe there's potential for a bond correction over the next several weeks, maybe months. So this is setting up as well. As you can see, rates went up from this low to 202 to 210 and gave it all back on the Fed. Also, what's happening overseas with the bund and rates falling. It's my contention that we're in a troughing period for interest rates, and I'm looking for action around the 2% level. I believe that we're going to bottom. In fact, 10-year notes look weaker than 30-year paper, which tells me there could be a steepening in the yield curve, which would, I think, surprise a lot of people. So I just wanted to show you the effect of the Fed today. Also, the yen continues to drop into my buy zone. I've been talking about it feels like 20 years now, under 108. I'm looking for about 107.60, 107.40. Believe we're about 40 pips, 50 pips away from achieving that. And I'm looking for both the yen and interest rates, US dollar yen and interest rates to bottom together. Best guess sometime next week, but you never know. I heard an expression to be there for the good times. You have to be there all the time. The next market I wanted to cover was silver. We know you guys know that I've been positive on this silver market, showing the falling wedge quite a few weeks ago. Silver had a good day as the dollar weakened after the Fed. As you can see, we've taken out a major resistance level at 1505. So not only is it positive that the market broke out there, but now we have a demarcation line. And if you've been long, you can really tighten up your stops because we really shouldn't close back below 1505. If we give back this breakout we had today, I would suggest stepping aside and booking the lows in silver were 1430. But if this breakout is valid and we hold above those levels, we could see 1550, $16 silver in the coming days. I've been talking about the gold silver ratio. They were about as strong together. Silver still looks like it's the one to play. Still think this gold silver ratio is peaking here. And I wanted to wrap it with copper. So it was last week I was talking about buying copper on this pullback from this 270 level. I was talking about 264, 263. We got a little deeper, but copper too. And I said 275 was viable on a, I believe I was using a daily chart. Still think that's possible. I mean, a very nice rally from 261 to 271. Perhaps a bit of a correction, a little ABC could happen, but as long as we stay above 266, I still think 275 is viable. That's going to be an area I'm really going to be looking for shorts because I definitely have a different view on copper than I do on the precious metals. But for now, I believe both copper and the S&Ps still look like they want to charge to new highs, and this should drag copper higher up towards that 275 level. Hope that my commentary has given you some things to consider during the week. I hope you have a great weekend. Remember, don't just count your pips, count your blessings. Dale Pinkert here, and I'll see you next weekend. Recharge and do your homework. Adios.